Hey guys, it's Rahim. Welcome back to my channel. If you're new here, smash the subscribe button because I talk about property investment, personal development, and how to gain financial freedom. In this video, I'm going to share with you why the rich get richer and the poor gets poorer, and to consider working for yourself instead of working for someone. So in this short video, I'm going to take an example of a company that is making only £45,000 revenue versus a normal citizen, a normal working class person that's earning £45,000 a year. So the concept around this video is for you to understand is how the government treats you as an employee versus a company, and how they treat you when it comes to tax and how much taxes each of these entities pays. And if you want to have a thorough understanding of what I'm going to be sharing with you, I'd advise you to stay until the end because it will blow your mind away. So before I get to that, I'd like to thank each and every one of you who subscribed to this channel. The channel is growing immensely, it's growing rapidly. Really pleased about it. I'm blown away about the result that we're getting. We've done a little research though. We realized 45% of the people that are watching my video have not hit that subscribe button. I kindly ask you, before you carry on with this video, to smash that subscribe button now. Smash it now. Smash it. And whilst you're there, hit the like button as well, because that helps the algorithm to push the video to wider and wider audiences. So why the government wants you to work all the time? The reason why the government wants you to work all the time is the exact concept I'm going to share with you on this video. So let's jump onto the computer. So let's take an example. Suppose the company's revenue is £45,000 a year, and this individual is also making £45,000 a year. So we do the individual here, £45,000. We're talking about gross income here, okay? This is the money before the tax is paid, okay? So £45,000, and the company also is making £45,000. If you divide that by 12, so the company is making $3,750, and of course, the individual is also making $750. So now, bearing in mind, if you are an individual, the minuses I'm doing here, it is taken from your net income, not from your gross income. But I just calculated here for you to have a picture of what is not even deductible from your salary itself versus what is deductible as a company. Suppose then this is a small business and this gentleman or woman is operating from their home. So if they're working, they're doing their business from home. Suppose then we say the bill, let's say telephone bill, is likely to be £30 per month. Okay, so if you're working from home as a business, you can take that cost, part of that cost, as a business expense. Let's say you're working full-time at home. Let's say 50% of that would go towards telephone, because obviously you're not using the telephone just for home, you're also using it for work. Moving on to your utilities. So if you are home and you're not working you haven't got a company from home, basically your utility bill, suppose that is £300, so obviously you'd have to pay that £300. Again, if you are working from home, that can be deducted 50%, that would be about £150. So council tax is another big one as well. If you're living at home, your council tax, perhaps depending, again, this is depend on the size of the property and on the locations as well. So I'm going with average figures here. It's about £250. So suppose again you're working, your company operates from home. With that £250 you would only pay, your company will contribute £100 towards the council tax, because obviously they are working there themselves. So let's look at insurance. Suppose your insurance is £40, because the business is operated at home, you can claim some of that as a business expense. So just to be nice, because you may have public liability insurance, let's say you pay also £40 here. So personal development. So personal development, as long as it relates to company, you're learning about advancing your company, growing your business, is tax deductible. Whereas if you are suppose you are a nurse or you're a doctor or you are a pharmacist, you've got something that you pay, they call it CPD, continuous personal development. So in most cases, it's not deductible as an employee. If you want to grow your career, obviously you have to foot that bill yourself. Let's just assume that to be £100 as well. Holiday. Suppose you want to go on holiday and you're working for someone. You could perhaps if you're frugal like most people, maybe you spend about £1,000. But because now you're a businessman and you're an entrepreneur, you're not just going to go holiday, because you want to go on holiday. You want to go on holiday, that gives you opportunity for an investment as well. Perhaps you want to have a business meeting, for example, or perhaps you want to go to a business event, or maybe you want to do something to do with business. As long as you can quantify that and you can qualify that and you can have a receipt for it, that then get paid for your business as well. So let's say 50% of that will go towards your business expense. Okay, let's go for repair and maintenance. So obviously, if you're an employee, your property goes wrong and you have to foot that bill yourself. But if you're working there, you can share that bill with your company, and that would be, let's say 50%. That would be £50 as well. Actually, you know, the maintenance, let's just keep maintenance on £100 as well. Let's say basically you've got some maintenance to pay for your company as well. Suppose you go your £50 maintenance for the property itself, your home. Maybe you've got your laptop, you've got your telephone, you've got the desk, you need to repair it. Let's factor that to be £100 as well. Professional fees. Again, if you are a business, someone can charge you professional fees, aren't they, for providing you a service or rendering you a service. So that could be, let's just go for an average figure here, maybe £250. So obviously, if you are an employee, that cost you don't pay for, because again, you are providing in most cases the professional service to that employee themselves. So moving on to consulting services. Consulting services as well, if it's a business, you've got someone, a marketing person or an engineer to consult a business, or a business manager to consult a business, you may pay them about £100. And again, I'm going about a bare minimum expenses here, okay? So again, if you're an employee, that's not a cost to you. Dues and subscription. Again, if you're a business, you may have subscribed to a business magazine or to something to do with business. You may pay £50. So that £50 is every month. And then obviously, if you are an employee, you have to be a member of a certain body. If you're a nurse, you have to be a member of a nursing body, or whatever that may be. If you're an accountant, you have to be part of a CCA stuff, or maybe ACA qualification to maintain your qualification. So that comes out of your salary, sadly, and that will be £50. So furniture and fixtures. So again, because it's your office, you may want to spend about £150 on that. And if you are a worker, that then comes from your salary as well. Let's say meetings. Meetings, again, if you're a business, you deduct that. If you're an employee, you are meeting people and literally to hang around or to learn about or to learn about your work. You may foot that bill. You may invite them for a meal, and then obviously you have to pay that meal. But for a business, as I said, you can deduct that from your cost. Maybe lunch as well. So you may want to go for lunch with someone as a business, that is tax deductible. If you are an employee, that lunch comes from your salary. So gift is treated the same as a business. You can deduct as an expense, and then obviously as an employee, you deduct it as well. Travel and cost of parking. So again, if you are an employee, maybe you are using your private car, as well as you're using it for business purposes as well. You're not going to foot all the bill. So obviously, if you're using it alone as personal, you pay £200. And again, if you're using it partially for business, that would be about £100. So let's look at the cost of books or magazines. Suppose you like to read magazines, stuff like that. Okay, if you are a business, obviously you deduct that as an expense. And then if you're an employee, you deduct that as a cost as well. So let's look at the total cost here. Okay, as a business, your total cost is £1,865. As an employee, your cost is £2,490. Okay, so that's what it would have cost you. So now we've added all these individual costs to the relevant person. Bearing in mind the individual is an employee, we haven't calculated the tax they would pay for their gross income, because this amount they're receiving here, $3,750, is their gross income. Okay, so let's work out the expenses first. What's the total expense? So if we go here, so the total expense for the company is £1,925. And the total expense for the employee, this is before they get charged for their tax, is £2,490. So what we're going to do now, if we deduct the sum of that, okay, that minus that amount here, gives us £1,050. £825. This is the income before taxation. So let's look at the individual person. The individual is £1,260. Again, we haven't even touched on the tax they pay for their salary itself. We haven't included the income tax. Moving on down, let's now look at the taxes each individual pays. So looking at the company here, the company, because it's a small corporation, it would pay 20% on its income. Okay, that would be £365. So £365 is what they would pay for generating that income. But for the employees, we have two taxes we need to collect. The first tax would be the income tax. So because they are below the 50,000 bracket, the 55 or 50,000 pounds bracket, their income tax is likely to be 20%. So 20% of £1,260 would be £252. So now that's the tax the company would pay. Let's now move on to the employee. If you remember, the employee tax would be based on their gross salary, right? The income they would have made before the government take their tax. So that income would have been this 3,750 here. You times that by 20%. That then gives you a tax liability of £750. Because obviously they are employee, they are subject to national insurance contribution. And the national insurance contribution for someone earning £45,000 a year, their monthly national insurance would be £216.16. So that is the total tax they would pay. So they've got the income tax subject to the gross income, okay, and then obviously they have the national insurance that they need to contribute, which is £216.16. So let's work out the total tax paid by both individuals. So for the company, the total tax is the £365. For the individual, the total tax is, you guys it right, 966.16 pence per month. Okay, so let's now look how much each of them actually had after all the taxes that they've paid to the government and after all their expenses as well that they would have incurred. So for the company, you've got the income before tax minus the tax they've paid, which gives us £1,460. Okay, now let's go to the employee. Their income minus the tax that they've paid, that would have given them a net income of £293.84. Crazy, isn't it, when you think about it? Let's now look how many times the person who owns the company have earned more than you. So if you divide that amount by that person that created that company would have earned 5 times more than the person who is an employee earn with the same total gross income. You may be thinking, wow, this is crazy. It is absolutely crazy, and that's the reason why the government wants you to be on the employee side of things, because if you are an employee, they make serious money from you. You can see the government would make £966.16 from you, the employee, and they make £365 from the employer. So hence the reason why they always talk negative about employers. They talk serious rubbish about employers, because they want you to become an employee. Because once you become an employee, then you become servants to them. You become the one that provides them the income. Because as you can see clearly here, all those expenses we've incurred here, none of those are tax deductible. None of them were tax deductible. Whereas the company that we've set up, or a company that I've set up, all of these expenses is tax deductible. So in essence, they deduct the expenses before the government tax them, okay? But it's the reverse if you're an employee. If you're an employee, before your employers pay you the £3,750, okay, they would have deducted £966.16 from it before you get your take-home salary. And obviously from your take-home salary, you then deduct all these expenses here. And bearing in mind here, I haven't even included mortgages to pay or rents to pay, for example. This is just the basic expenses you could have incurred by living in a property or by living in your own home. As you can see here, it's crazy. When you look at the figures, it's absolute madness. Hence the reason why I tell people, why do you want to work for someone? What is the reason why you want to work for someone? If there's a reason for it, I understand, but it's not tax advisable to work for someone. So do whatever it takes to start working for you, because once you start working for you, you get your company to pay almost all your expenses. As you can see by this individual here, literally everything is almost paid by his company because he's working from home and he's utilizing the services from home, running his business, and his business is making £45,000, and from that he can deduct all these expenses. Whereas you're an employee working ridiculous long hours in a job where you're undervalued, underappreciated, maybe earning a bit of average, a bit more than average, like the £45,000, only to be making £293.84. So here's the thing. Are you really looking to stay doing the same thing over and over and over, expect a better result? Of course not, because the higher your salary, the more taxes they hit on you, and the less income you make. You realize you're getting more responsibility, more pay at work, but your actual take-home salary is not that much. So what I advise you to do is to start doing your own thing. Start doing your side hustle, for example. If you're one of those who like to be safe and secure, maybe you want to start doing a side hustle. Slowly start doing your own thing. Perhaps you're an IT engineer, you are a technician, or you are a business management person. Have you think about consulting? Have you think about opening your own consulting business? Have you think about opening your own IT business to support small businesses? If you're very good in financial softwares, for example, Xerox, QuickBooks, you name the softwares out there, perhaps you may be able to help small businesses on how to operate these things. So instead of you actually going and working or slaving yourself for someone else, you can go and start your own corporation and obviously do it that way. Or perhaps you want to do what I love to do, which is property. Instead of quitting a job now, you can start investing in property, start making money from property. So basically you could slowly wean yourself out of it. Then you create a company that will look after your expenses, your business expenses, whilst you live comfortable life without worrying about actually working for someone. You see, when you're working for yourself, you put all the efforts on all the enthusiasm into it. It really helps you. As I said, if you want to get into properties, you could do property basically. Get these properties going, get them on a company, basically buy the properties on the company, and then what you do, all these expenses you can claim as a tax deductible expenses. But here's the thing, make sure whatever you're deducting from your business expense is actually allowable tax deductible expenses. And please keep your receipts as well, because HMRC may turn around and ask you to provide evidence of your expenses. So things like that you want to keep aside just in case it's needed for the long term. Here's the big deal. Now you know this. What action are you going to take you a little bit closer to become financially free? Because now you know working for people would only get you busier and busier and busier and get other people richer and richer and richer whilst you're struggling to meet your basic needs. I would advise you to strongly look into this and see how you can take yourself a little bit closer to become financially free, making money work for you instead of you working for it. If you'd like to know how to make, manage and multiply income through property investment, there's a link on this video. Click on that link to book yourself a free consultation with one of my specialists. Absolutely no charge, and there's no mandatory payment as well for you to sit with my specialist. They would advise you about how you can use money, how you can make money work for you instead of you working for it, and the benefit of investing in property, and what are the avenues you can make your money work a lot harder for you. Because if you're not making money whilst you sleep, you will work until you die. So click the link right now. Go ahead right now, click the link on this video to book a free strategy call with one of our consultants. Or by the way, if you don't, it's fine, absolutely fine. But I hope this video has been helpful and it's been very useful to you. If you like this video or any of my videos, don't forget to smash the like button below, subscribe to my channel for more amazing videos. I look forward to sharing the next one.